I'm Steve Forbes, and you're watching Traders Nation.
Welcome back. You are tuned into Traders Nation. My pleasure to have back with us once again Brad Williams. He's president of Brad Williams Financial Services. Brad, welcome back to Traders Nation. How are you today?
I'm doing great. How are you doing today?
Doing awesome, thanks. So recently, a Commerce Department report indicated that U.S. retail sales unexpectedly fell for a straight month in February. What caused this, Brad?
Well, when we look at, we had a lot of bad weather. I think when people come out of Christmas, they're paring debts down. So there was a lot of downward pressure focused on that. And when you look at the segments that had some issues, auto dealers, gas stations, traditional department stores, your old brick and mortar stores, those are going to be affected when traffic is low due to bad weather. And I think in the department store arena, we're going to continue to see that because the trend is just away from the box stores and to online. And online had a 1% increase. So it's not that people weren't buying anything. It's just that the trend continues to go towards shopping from the comfort of home.
Yeah, I tell you, it's a big shift, isn't it? Because we've been covering that on Traders Nation for some time, and it does seem that online comfort is preferred, especially for a couple of reasons. One, free shipping. People love free shipping if they can get it. And two, it used to be no taxes, but now that's starting to trickle in a little bit more depending on what state you're in. But people love that. They don't want to go out and shop and fight those crowds when they can have it delivered to their front door, right, Brad?
Yeah, and I know in our family, a lot of times we might go to the big box store when we're out and look at it and touch it and figure out if we like it, but then we end up going back home and buying it online.
You can get better pricing. So, in fact, we just covered that in our last segment, whereas Amazon is running some problems in the market. President Trump is looking at it, thinking they're too big because they're squeezing out small business. So that's a valid point. Go feel it, touch it, kick it, then go back and price compare it and buy it. Right? All right. So automobiles was not hit during this, but rather it's not part of the equation of price concern because gas is one of them, automobiles is another. Doesn't come into that factor, does it, when it comes to the government, the Commerce Department doing the reports, is it?
No.
Yeah. Okay. And so then, with that said, big ticket items probably may be suffering their worst when it comes to consumers not spending money, Brad.
Well, and I think part of it, too, is there's still a lot of uncertainty about how people are going to be affected by these positively or negatively by the new changes in the tax law. Okay. And there's kind of a wait-and-see approach, and I think that's part of it, too, especially when you're looking at big-ticket items, weather and tax issues, and they're wanting to see what their refund's going to be. They're wanting to see, do they need to adjust withholdings and all the things associated when you make a major change in the tax code.
Sure. Let's touch a base on that then, okay? So with the sluggish figures that we're seeing, the job market's strong, picking up. I saw the unemployment rate lowest in decades. It really is. We're seeing a rise in property values. That makes people feel good and find some confidence when they start to see their home properties value rise along with their 401ks, if you will. So this it bodes up and shores up confidence in folks. You think that kind of confidence is going to get us back into spending for the rest of the year?
Well, it could very well do that. Another factor we haven't discussed is we've had a lot of turbulence in the market the first couple months of the year. And as you mentioned, people feel really good when they open that statement from their 401k every month and they see a rising value. But when they start hearing about big drops, several times in a week, and the fact that, we're losing a lot of the gains for the year, and that makes them sit back and take pause. But, one of the big numbers that doesn't get mentioned much is the workforce participation because, the government can play with that unemployment number in a lot of ways, and they have for a long time. But it's the amount of people in the economy and those that are working that's really important. And we're seeing workforce participation increase. There's more and more people entering the workforce now because they feel more confident.
Right. Okay, so we are seeing that, and that's separate in addition from the unemployment rates that the federal government puts out and often revises. Stronger economy coming in. And here's the other thing, too, is I feel that companies are, because it's a harder to find good employees, it's harder for them to certainly find them. They're maybe thinking twice about letting folks go, especially if they're going to be thinking they're going to be experiencing growth within their own companies. So the demand there for companies is going to grow.
Yeah, I would agree with that, which is a little better job security for a lot of people because it is very expensive to replace somebody. So you want to really think twice before you cut somebody loose. And there's a lot of demand on those skilled positions that wasn't there, 3 or 4 years ago.
Sure. When
companies weren't sure what to do. They had to deal with extremely low interest rates, a health care bill they weren't sure really was going to affect them. And so they were really hesitant to hire because they just didn't feel comfortable. Well, now the environment's more pro-business, and it's cutting back on regulations, and that's positive for business. So we're seeing optimism from the hiring side.
It totally is, and businesses had so much. I mean, flush with cash. They had literally trillions of dollars domestically, internationally, offshore, just waiting. You're absolutely right. The health care bill, they weren't sure how to accept that and how they were going to implement that and how it was going to affect their business. They weren't sure how they were going to be blindsided, if they were going to be, with higher taxes and regulations by this last administration. So really, this administration is kind of offering them a much clearer environment for them to do business in. And now they can forecast growth. They can do all the things that they wanted to do, that they got the cash now to do, right?
Yeah, I would agree with that. And one of the biggest enemies of growth is an uncertain environment, economic environment. And when you've got, government that wants to come in and take over everything and have their say in everything, especially since most of them that were participating never even really had a position in the private sector, that makes companies very, very, they want to play their cards close to their vest. And now they're seeing, well, maybe it's time to grow again. Yeah. And, a lot of that low interest rates went to stock buybacks. That pushed the market up. We'll see what happens as interest rates rise and there's not so much easy money for these companies if stock market's going to continue to go on the boom that it is.
Okay. New construction, we're almost out of time. We're seeing some new construction coming in. Building materials, how are they faring?
Wood. Yeah, we're seeing that. That'll start to come up. Yeah. So, and that's one of the areas that had a bright spot was building materials. So, that's one of your leading edges there. As people start putting money back into their house, they're confident that their house value is going to increase.
Plus, all the trades, plumbers, framers, all those guys are going to be busy again. I bet you they're glad to be back to work because I tell you what, they too took a beating over the last decade, that's for sure. All right, so lastly, if there's one thing that we need to know parting here today, Brad, what would it be?
Well, just play it close to the vest. Make the right decisions based on long-term and not what's happening short-term. Don't read the paper to make your decision. Sit down and calculate your plan and what you want to do. Don't make it based on emotion. Make it based on, thought.
Fundamentals, solid fundamentals, right?
That's right.
Yeah, all right. So, Brad, where can we find you here today?
Well, best way to find me is you got a financial question, you just ask Brad Williams. So my website's askbradwilliams.com, and I've got a radio show on myself, so they can tune in at askbradshow.com.
Askbradshow.com and askbradwilliams.com. Askbradwilliams.com. Head on over there, check it out here today. Brad, thanks for your time here on Traders Nation. We appreciate it.
Oh, it's always a pleasure. Thank you.
Stay tuned. We'll be right back.